Well, if you have been investing in the stock market for less than 24 months, you have clicked on the right video here today. Usually I do most of my videos just for everybody out there, but today I wanted to talk to a specific segment of folks that are out there, which might be you watching this video right now. You're somebody that has been investing in the stock market for less than 24 months. And if anybody's watching this video that's been investing for more than 24 months, I'm happy to have you here. I hope you learn a little bit from this video as well. I'm definitely going to try to bring out some different value on some different points in this video. Like I said, it's directed really at folks that are newer to the stock market, which if you're newer to the stock market, sometimes you have these thoughts like, am I even in the right place? Should I be actually investing in this? Is this a right time to be investing? Should I wait till next year? Should I wait till the year after? All these different thoughts go through your head. Is this even the best place for my money? Like, why should I be going with this strategy versus this strategy? So many different thoughts, because usually when you first get in the stock market, you're not sold instantly, okay? It's not like all of a sudden you're like, oh my gosh, the stock market is the best place ever. It takes time to build up to that, okay? It takes time. I remember when I got in the stock market, it wasn't even like I knew the stock market was a great place. It was just like, it was like going back to like 2008, sometime around like 2008 when I first started really starting to look into the stock market a little bit, started getting into it more in 2009, especially in 2010. And when I was looking into the stock market, it was basically out of necessity. It really wasn't because of like a reason of like, oh, I'm going to become like a multi-billionaire or something like that. I'm going to become the next Warren Buffett. It was more just out of necessity because I was looking around and I wasn't getting crap for my money if I had my money in a savings account, which I hardly had any money. I think I had like $1,000 maybe at that time. And I was looking at real estate and I was like, it's so unrealistic for me to buy a real estate property with the small amount of money I had and those sorts of things. And I'm looking into gold and silver. I'm looking at these different things. And at the end of the day, it just came back to I could buy assets of companies. And that seems like the best route for me. So that's what got me rolling into the stock market. And I got more and more sold on it as I started having some success. Realized, oh, I'm actually pretty decent at this. Started learning more and more. And then I built up to having a high level of confidence in the Jeremy you see today, 10 plus years later, okay? But it took a long time from that, where I started at, to get to the place I'm at now. I wasn't sold instantly. It was like, maybe I'll try this out a little bit. Okay, I made a mistake here. Oh, I started making some money here. Oh, I started making some more money. Hey, maybe I have something here. And then you just take it step by step further, okay? So I want to talk to you guys about three big things in this video here today, okay? First one, we're going to talk about the D's, okay? Then we're going to talk about SP versus IF. Then we're going to talk about GBs, okay, at the end of this video. So we're going to cover all those three in depth, and I think I'm going to change a lot of mindsets here today, or at least try to put you on the right path. So if you're newer to the stock market, you kind of know what you're going after, why you're doing this, and those sorts of things, which I think is important. So I hope you guys enjoy this. As always, hope you get a good amount of value out of this video. If you don't mind, smash the thumbs up button. That helps out the channel in general. And let me know in the comments section if you're somebody that's newer to the stock market. I would love to hear from you down there as always, okay? So in regards to these three things here today, okay? So first thing I want to talk about is the why, okay? I think this is just big, like a mental thing to get get through your head. Like, why are you doing this? Like why was I listening to an Upwork conference call last night at like 1 in the morning? Like why? Like why do you do this? Okay, and it comes down to the D's at the end of the day. Okay, it really comes down to dreams, and this is more of like a philosophy part of the video. I want to really take this into like philosophy because dreams, right? Everybody, almost everybody has some sort of dreams, okay? Like they imagine like in the future, like their life being a certain way, okay? Maybe it's they want a big house, okay? There's definitely a lot of people don't like to admit it. They would love to live in a mansion or something like that, right? A lot of people would love to travel the world, right? I mean, it's the amount of people that, would love to just be able to get on a plane and go to this place or that place. They would love to travel, right? Retire early. I mean, a lot of people, let's be honest, they hate their jobs. I mean, if they had a choice, they would retire tomorrow if they wanted to, right? I mean, they're literally just for the money, and they're like, okay, I got to make this money today. Okay, they would gladly leave their job tomorrow if they could, okay? Maybe in regards to retire early, sometimes it's just like, so they could spend more time traveling, spend more time with like family, friends, like kids, whatever the situation is, right? And, these are kind of some of the big ones. Now, there's other things, there could be, somebody has dreams to have certain kinds of cars. I remember when I used to have dreams of like, I always imagined like as a kid, like, oh man, it'd be awesome to have a Lamborghini someday. And I would like, imagine myself driving a Lamborghini and just like what the feeling would be behind that and those sorts of things. And so when you get into the dreams, all these different things, at the end of the day, almost all your dreams that you could ever want to fulfill for most people out there, money is in the way. Between you and achieving your dreams, whatever it is, traveling the world, having that house you always wanted, that car you always wanted, retiring early, anything like that, usually at the end of the day, there's money. It's coming in between this. It's becoming in between you and your dreams. Money is the pain point. Money is a place to live the reality that you want to live, right? If you want to, have, 10 houses and they're all 10,000 square feet each, and that's your dream, respect you. You can do that. You want to have, a different Rolex every day of the week or something like that. Like if that's your dream and that's what you've always imagined and that's what you've always been excited about, respect, okay? Money is in the way to get there. If you wanted to retire early, if you wanted to give money to charity, right? Let's say, that's one of your goals or something like that, which that's my big end goal is giving massive amounts of money to charity, either I found or, somebody that just is doing a lot out there that their money's being put in the right place, right? Whatever the situation is, whatever your true dreams are at the end of the day, money is in the way to get there, okay? And so if you're looking at this and you're like, okay, what is the purpose of making a lot of money or a good amount of money? It's so you can live your dreams. This is a truth at the end of the day. And, sometimes I even think like, why do I love, still looking into stocks? I've been doing this for over a decade now, right? Over a decade. And I still love to listen to conference calls. I still love to read annual reports. I still love to find the next stock. I really think about that and I'm like, do I just naturally love this stuff? Or is it the fact that I just realize, especially for my big end goal when it comes to charity, I love doing it because I know it's going to help me fulfill my dreams. So this is why you do this. This is why you invest in the stock market. This is why you care about building wealth, because it's going to allow you to, live your dreams. Whatever schools you put your kids in, if that's a situation, or whatever neighborhood, healthcare, everything is dictated by money. And so if money's that middleman to get there, how do you get the money? Well, stock market investing is a phenomenal place to do that. Stock market investing, okay? Investing, okay? Let me say it one more time. And so when I really look at myself now, I've achieved everything I could ever want materialistically. I got 2 houses being built. I got, Teslas. I don't own a Lamborghini. I could go buy one right now, after this video, if I really wanted to. I have no interest in owning a Lamborghini. But I was literally thinking about this the other day. We took a week off, and this was a week or 2 ago, right? And we went to Scottsdale Fashion Square, super nice mall. They got all the fancy stores in there from Rolex and Louis Vuitton and all those stores. And I was walking through the mall and I really wanted to spend money because, I got plenty of money. And I was just like, there's nothing. There's literally nothing. Not one material possession on this planet right now that I want. Nothing. There's not a house. There's not a car. There's not a necklace or a watch or anything. There's not a piece of clothing. There's nothing that I want on this earth right now, materialistically, because I already own it all. And so when I really got to thinking about that, I'm just now that I got the materialistic stuff out of the way, now I can just focus fully on acquiring more money so I can do what I really want to do, which has always been how I got to the idea of giving massive amounts of money to charity was I actually watched Warren Buffett many, many years ago when I was actually trying to learn about his investing philosophies, and he spoke about how he was going to give 99% of his wealth away, and it was this incredible amount of money, whatever it was at that time, 60 billion or 7 billion, and how 99% of his money was going to be given away to charity. And I just thought that was the biggest flex of them all, right? I just thought that was the biggest flex I've ever heard in my life. It's way bigger, and I think Bill Gates is doing a very similar thing, and that's just the biggest flex. You pull up in a Lambo or a Ferrari, okay. A lot of people have Lambos and Ferraris, okay? You have a nice house, okay? A lot of people have nice houses. You got a nice watch on or a nice necklace or whatever, or jewelry, some nice earrings. A lot of people can have that, right? Give away 50 billion to charity of your choice. That's an ultimate flex. I've just always felt like that was the ultimate flex and just kind of like a really fulfilling life to live if you're really taking it from that angle, because you can never spend that much money. Never spend that much money. And so, you know, that's kind of where my brain went for. I wasn't like, I didn't grow up in like my family I grew up in, you know, we were always either, you know, poor, or the best we ever were kind of like middle class, which was fine, right? So there was never like a bunch of money to give to charity or something like that. So I really got my mindset changed when I heard about the giving pledge that Buffett was doing and Bill Gates were doing and some of those folks. I just thought that's a flipping cool thing, man. I just, like, for me, that was cool. And so for me, this is really what my ultimate dream is, you know, especially because I've already got everything I could ever want materialistically at age 30 now. So I'm fortunate for that. But this is why you do it. This is why you should care about stock market investing, because it's going to enable you to live your dreams. Just flat out. It's going to allow you to hopefully get to this place. You put in the work, you got the right strategy, you're going to acquire the money so you can live your dreams. And that's what it's all about at the end of the day. There's one life to live, and you want to, do as much as you can possibly do and enjoy all the things that you always dreamt that you could achieve in this life, okay? So that's kind of really, a deep place I just, took this video right off the bat. I hope you guys are still with me, on the deep part like that. Let me know in that comment section if you feel something like that, because I just, been across so many people in life, and almost everybody has dreams of some kind. But unfortunately, most people go through this life without ever achieving their dreams. Let's just be honest. They never get to really have that reality they wanted to have. They never got to, travel the world, or have that house they always dreamt about having, or retire early. They never got to achieve any of that, because at the end of the day, money prevented them from achieving that. And that's just disappointing, man, because it's one life to live. Like, why not, reach your dreams and make all those things a reality? So that's my, opinion on that. I hope, that one kind of sticks with you guys forever, okay? Number two, okay, let's talk about number two. So what we're talking about here when I say SP versus IF is we're talking about stock picking, okay? Stock picking, which is what I do and what I teach, okay? If you ever notice all my content, my teaching content, it goes back to what? Individual stock picking, like putting your money in Apple stock over here, or Google stock, or actually picking stocks individually, okay? Oh, and even like my videos I come out with, each month, 3 stocks I'm buying and stuff, it's all stock picking related, right? And we're talking about this versus index fund investing, okay? Buying into an index fund, something that tracks the S&P 500 or something like that, okay? So in the public account, which is available for everybody in my private group to see every single move I make, I'll show you guys right here, okay? That's at like an 83% one-year rate of return. You compare that against the S&P 500, the NASDAQ, the Dow, anything across the board, and it's not even remotely close. I'm, just crushing, absolutely destroying the market, and everything's, publicly available for everybody to see. That number is calculated by Fidelity Investments, not calculated by me, so I'm not just making up some number. It's calculated by Fidelity Investments, okay? And so this is why I do it, because index fund, although an index fund's fine, if you're lazy, dude, put your money in an index fund. I'm all for that, because you'll get your, let's say 8% a year or whatever on average, putting in an index fund that, that basically mirrors the S&P 500. And over a 10, 20, 30, 40, 50 year span, you're going to do very well for yourself, okay? But there's a big difference between, let's say, getting an 8% return in the S&P 500 on average and getting a 20% return, or a 30% return, or something like that, okay? There's a massive, massive difference. This is why I am all for stock picking, okay? And that's why I'm all for last night listening at 1 a.m. to a conference call I needed to listen to from Upwork, okay? That's why I do this in the end, because I'm looking for the next great deal in this market. Oh, this stock just dipped huge. Oh, there's this big potential opportunity over here. Let me buy into this. This is why we're doing it, okay? Because stock picking gives you the ability to create such bigger gains. Literally, if you just played around on a compounding calculator for a few moments, okay? And you just ran yourself at an 8% return, per year, okay? Let's say an 8% ROI per year over a 10-year span or 20-year span, versus, let's just say, a 15% ROI, which 15% in my opinion is very doable in the stock market. You don't even have to be a great investor to get a 15% ROI on average, in my personal opinion, in the stock market. You have to be, I would call you a good investor. You get 15%, you're good. You get 20% or more, okay? 20% plus, let's just put it that way, ROI, year in and year out, then you're talking about you're really into the great category. Now, run numbers if you're a good investor versus an index fund investor, and run numbers if you're a great investor versus, an index fund investor. And you're going to find out the money's, it's just a total different thing. And when you're talking about achieving dreams and things like that, and remember, my dreams are really huge, okay? My dreams are ridiculously huge. I want to be able to give crazy amounts of money to charity, right? And so if I'm going to achieve my ultimate dream, okay, I'm going to need to do some amazing things while I have the time to do it, right? Which means I need to be focused on being a great investor. And that's why still to this day, I'm willing to put in the work and I'm willing to do these sorts of things, because it's when you add up the numbers over a 20 or 30 year span, especially if you add it up over a 40-year span and you get in this game young when you're like, let's say in your 20s or something like that, the numbers are different, man. The numbers are completely different. The dreams, the things you're able to achieve, it's just, you can't even compare them, guys. That's why I believe in doing this. That's why I believe in stock picking and picking the individual stocks. Always with a long-term mindset in mind, okay? Always thinking from long-term perspectives. Never thinking about just, short, quick-term money or something like that, because that's the type of stuff that's going to take you more than likely the wrong way. I've just seen it with myself. Anytime I've focused on short-term money and trying to make money in a stock real quick because something's going on that's just, benefiting them today and tomorrow, it usually ends bad. But when I'm focused on the long term with the company, it's a whole different situation. So for you guys out there, just focus on the long term with these companies and understanding them on a very high level, okay? Because the ROIs are different, okay? They're really, really different, okay? Number 3 thing I want to talk about here, okay? So let's say most of you guys watching this video right now, you should be investing for less than 24 months, okay? You're less than 24 months into your journey, which means, you're a noob, okay? I call anybody that's basically been doing this for less than 2 years, a noob. And that's awesome. You're getting rolling with this. You're figuring out everything to look for in stocks. You're figuring out the stocks to stay away from, the industries to stay away from, the industries to go after, where the opportunities are in the market. You're figuring out the balance sheets and the income statements and the PE ratios and all these different metrics and things like that. That's phenomenal, okay? Then you have your group, which I call, kind of the 3-year to 10-year investors, okay? This is usually a stage that I call, kind of a massive improvement stage, okay? Where you really start to invest at a better and better level. As long as you stay on the right track, which you could go off the wrong track, especially if you have some success, you let it go to your head, you start thinking all of a sudden you can do swing trading, day trade, and just because you had success picking some great long-term investments, that's happened to me before, around like 2014, 2015, right? I had so much success in the market that all of a sudden I started thinking I could predict earnings. I started taking it too far, ended up going backwards and had to climb my way back up, okay? So it started in 2016. Make sure you avoid things like that, but you should have massive improvements. Right here, some of the terminology you still don't even know. You're still learning the terminology, right? By year 3, 4, 5, you know the terminology. You know what stocks to start going after, okay? And then from year 10 to year 30, I call these your prime years, okay, in my opinion, in stock market investing. Now, past 30, I think you start to kind of, not to say you're a bad investor, but I think you age out a little bit, okay? You start aging out a little bit. Sometimes the techniques can change over that course amount of time. Sometimes new industries can come upon that you just really don't understand because you've been doing it so long into certain industries, and all of a sudden you're in year 43 of your stock market investing journey, and you're just like, man, I don't understand any of these new companies and what they're doing and why this valuation makes sense. And we've seen it from some of the older investors. Not every older investor this happens to, but we've seen it from some, right? Even my legendary investor that I love, more than any, Warren Buffett, right? Even Warren Buffett has kind of aged out on a lot of different things out there, really understanding technology stocks on a high level and understanding, that sometimes the market is pricing in 3 or 5 years of growth with these companies, but it can make sense because they're growing so rapidly. And so sometimes just naturally you age out. But you have this 20-year span, basically, which I call your prime years. And this just allows you, you're just like, if you've really been focusing on this, you should be like just like a Michael Jordan, okay? You should just be ready to rock and roll for 20 years of just some phenomenal gains. Maybe not every year is a phenomenal year, but you should have some amazing years in there and be able to do very well for yourself most years, okay? This is your prime years. Because at this stage, I'm in year about like 12 of stock market investing, right? And I mean, I look at the stocks I'm investing in now and I think about the ROIs I get on those stocks and where I'm going to likely get, with some of these stocks in the future. And I look back at the stocks I was in, 5 years ago, or especially 10 years ago. And I'm like, man, those stocks I was in 10 years ago or 7 years ago, I wouldn't even consider those nowadays because they're just not even close to the level of types of stocks I'm in nowadays. The types of ROIs I'm getting nowadays in these type of stocks, it's whole different levels, okay? And although that was a great time to invest 10 years ago, market had been really beaten down from the Great Recession, I look at a lot of those stocks, I'm just like, dude, I wouldn't even consider that. You get better and you get better as time goes on. GB stands for getting better, okay? And this is what should happen over time. You should get better and better and better. And everything you learn is cumulative, okay? And by being in the market, experiencing these things, you're going to go through some either bad situations or some great situations in the stock market. And through those situations, you're going to learn, oh man, I need to go after this. I need to go after that. I need to stay away from this. I need to stay away from that. And that allows you to just kind of level up in whole different ways than you ever thought possible, okay? And so, you're going to get better. You're going to get better. And so if you're in your first, let's say, year of investing or something like that, and you make a mistake and you buy a bad stock or something like that, don't think that's the end of the world, okay? Think about it anyway, right? If you've never played basketball in your life, right? I hope you guys all know basketball watching this. You shoot a basketball into a basketball hoop, right? Imagine you never played basketball before and you go to shoot your first shot. Dude, you're probably not going in. I'm going to be honest. You're probably going to shoot an air ball or it's going to be some horrible shot if you never shot a basketball before. More than likely, it's not going in. Now, does that mean you can't be a good shooter? Absolutely not. You just got to practice. Oh, I need to put a little more power into it or a little less power. I need to aim it a little better. Okay, And all of a sudden, you get better and better. It's the same exact thing with the stock market, guys. It's the same exact thing. Don't expect all your first shots to go right in because sometimes it doesn't happen. And at the same time, get in good habits very early, okay? There was a great saying I heard from Warren Buffett a long time ago, and I love this saying. I remember it to this day. Essentially, what Warren Buffett was saying was, great habits, if you're getting into good habits, essentially, those are very hard to break once you get into great habits. However, if you get into bad habits, that's also very hard to break. So if you start off, you're really a lazy investor, you're not, doing the research work, you're not reading the 10Ks, 10Qs, listening to conference calls, looking at investor presentations, doing all the work necessary to pick that next great stock, those bad habits are really hard to break. However, if you get into great habits early on, which I was fortunate enough, I got into them, reading the annual reports, listening to conference calls, keeping up with the quarterly reports, all those sorts of things. I got into those. I still remember reading those reports on the bus while we'd go to track meets and stuff. And people, some of my teammates and stuff, they'd be like, "What are you doing? You're reading the annual report on Vulcan Materials. What's the matter for you, man? What are you doing?" I'm like, I got time. It's a 2-hour bus ride. Why not read an annual report right now? They're like, what are you doing, man? And at the end of the day, I was getting into some great habits at a very young age in my first year or two in investing. And, obviously other people chose to make other decisions in their life, and that's fine. But if you don't get into those great habits early on, and you get into bad habits, those are going to carry around, and it's going to be hard to break out of those great habits. And you'll end up doing a thing where essentially you're gambling money in the stock market rather than investing money, okay? If you're not doing the real research work, you're gambling your money around. You're not investing your money. An investment, a business investment, if you're a businessman or a businesswoman, right? A business investment means you fully research whatever this is you're going to put your money into. You understand it on a high level. You understand why you're more than likely going to make money in this. You're going to understand even the risk factors. What are the chances you lose money in this? You're going to understand everything, and you're going to say, I'm going to buy into this business. And it's the same exact thing when you invest money in the stock market. You have got to be on the ball. You've got to understand the company. If you don't understand the company, don't invest in it, okay? If you don't understand why that company is more likely going to make you money over the next 5-10 years, don't invest in it, okay? If you don't understand, what the risk is going in, don't invest in it. If you don't know what to look for, don't invest in those sorts of things, okay? Otherwise, you're making gambling decisions. And a true investment is you understand all those sorts of things, okay? So, I'm going to leave the video here. I hope this helps you out immensely for any of you newbies in the market. If you're somebody that has $10,000 or more in the stock market right now, or you're at a place where essentially you want to invest $10,000 or more in the next 12 months, check out the first link in the description. That will actually allow you to apply and hopefully get on a call with somebody high up from my team, and we could talk to you about a potential product that can help you scale your portfolio out. And other than that, check out, the other resources that are linked in the description, as well as my other videos on the YouTube channel. I hope you guys got a lot of value out of this video here today. If you don't mind, smash the thumbs up button. That helps out the channel in general. And to all the newbies, welcome to the stock market, and I hope you have a great several next decades. Let's just put it that way. Thank you for watching, and have a great day.